Now, the decision by the Central Bank of Nigeria Governor, Mr. Godwin Emefiele, to completely prohibit individuals and local firms from investing in both its primary and secondary open market operations, or OMO auctions, about 2 months ago, is having a positive impact on deposit and lending rates. Now, since the announcement, there has been a noticeable decline in lending rates of commercial banks. Similarly, deposit rates paid by banks to customers have also dropped drastically to between 2 to 3%, while interest rate has nosedived from as high as 18% to around 11%. Rise business analyst Chika Mbonu is here to examine the year 2019 for the banking sector. Chika, it's good to have you. Morning. How do you do for the banking sector? Who were the winners and losers?
The 2019 has been an interesting year for the Nigerian banking industry. So many things have happened. You know, what we'll do in the few minutes that we have is to just go pick some of the items and look at them. The year started with the International Financial Reporting Standard, IFRS 9, being for full implementation in Nigeria. The IFRS 9 talks about the accounting for financial instruments. Principally, one of the elements of it has to do with management of, classification of financial instruments and then impairment of financial assets. You know, Nigerian banks, we are told to restate their opening retained earnings. And that was the kind of amounts were substantial. But what happened again was that the Tier 2 banks were told that you can spread it over 4 years so as not to hurt their capital. Otherwise, if they're taking it the full year, full impact at once, it would have hurt their capital and led to them needing to raise new capital.
Indeed.
Yeah, so that was a major issue, and it has helped to clean up the bank books and eliminate, the issues that surround, how to account for impairment of assets. So there's a consistency across the industry on that. Then one of the other major things that happened during the year has been the Access Bank Diamond Bank merger. Access Bank Diamond Bank merger. The Access Bank, a Tier 1 bank, very strong balance sheet, very good corporate governance, very good risk asset management systems, but reasonably high cost of funds and not very strong in the retail segment. Diamond Bank, a Tier 2 bank that was very strong in the retail segment, one of the top players, leading players in the digital segment of the market. So the major parameters was sound for each of the two banks, and they came together. And what has happened now is that based on the Q3 2019 result that's coming, the dynamics of the banking industry among the top 5 banks has changed. So Access Bank, through this merger, has become the #1 bank in Nigeria on the basis of total assets. So that's one of the dynamics that changed. They have now transferred it to profitability, and we hope that will happen down the line.
Indeed.
So the indications of other banks eyeing possible candidates for merger, especially as the Central Bank of Nigeria has said they're going to recapitalize banks. Now, the other major thing that has happened in 2019 was the Central Bank governor's tenure was renewed for the second term. And it's impactful because of the fact that before now, most of the CBN governors have only lasted one term.
That's true.
So he must have done something right to end this second term.
Indeed.
But arising from his, renomination and confirmation by the Senate of Nigeria, he read out his, portfolio for the next 5 years, his program for the next 5 years. And one of the major things that came out there was the fact that he has to discourage banks from, focusing on fixed income securities, treasury bills, and turn their face now towards lending to the real sector. And he said he's going to tamper with that. And that has led to, major policies that's fallen off, affected the banking industry in the last 6 months. The first one is the LDR, loan to deposit ratio introduction, which the first deadline was September 30th. Banks, Nigeria, we are told to move their loan to deposit ratio to 60%. Nigerian banks have been very notorious, in not shying away from lending. Maybe because of the, unfriendly, macroeconomic environment that limited lending. Or in addition to the fact that government of Nigeria was borrowing a lot, and so they had quick wins in the treasury bills and other similar products. And so they're making a lot of money. So the first thing was that they had to move their loan-to-deposit ratio to 60% by September 30th.
Yeah.
You know, and then concurrently, the Central Bank also said that by December 31st, that ratio has been moved to 65%. For the compliance of the first date, September 30th, to show their seriousness, the Central Bank of Nigeria debited the top certain banks who didn't meet the ratio to, you know, move the money to cash reserve ratio.
So there's no backing out of that.
So that has been, that issue, that policy has had an impact because about 1.1 trillion have been released as new loans to the economy. Okay. Remember, CBN has been driving to grow our economy, our GDP, which has been struggling at the lower twos, still below our inflation, population growth.
All right.
Now, in addition to the loan-to-deposit ratio, the Central Bank of Nigeria found that a lot of banks were trying to round trip the money to the treasury bills using some companies.
Yeah.
So immediately CBN came out with the policy and said no more. All individuals and corporates will not be allowed to invest in Omo bills again. They can only be allowed to invest in Nigerian treasury bills, but not in Omo bills. Now, so immediately you found a ton of money, you know, locking there, looking for where they're going to be invested.
Indeed.
And so the first thing that happened was that the national auction that was done, all the money that couldn't go to Omo bills went to treasury bill. And for the first time in a long time, the Nigerian treasury bills came down to single digits. Wow. Now, what's happening now is that you still have that ton of money looking for where to invest it. And then banks are pushing for loans. So what's happening now is that a lot of money is chasing the loans. So naturally, interest rates are falling, as you reported in the news. Again, banks are shy away of, see, we've taken the deposits. We don't know what to do with the money. So the next thing that's happened now is that the deposit rates are also falling.
Indeed.
Impactful for the economy because we have been crying since for interest rates to come to single digits or lower double digits. So that is helpful to the economy. But we'll see how that will go in the long term. Okay. Now, the other thing that happened during the year is the deepening of the electronic banking franchises for most banks.
Okay.
As a lot of banks are making negative net interest income, you know, they pushed for the expansion of their franchises on the electronic banking. Okay. And what's happening is that a lot of them double their income and electronic banking fees. Concurrent, and aligning with that also was that new things came up in the industry, which is tied again to the loan-deposit ratio. A lot of banks now forayed into retail lending. So a lot of individuals in Nigeria now, for the first time, are enjoying retail loans. And finally, the other thing that I think may be major for the economy is the rise or the growth of fintechs in the economy. And the CBN governor last time talked about that, about $400 million of investment have come into that sector, covering areas like payments, retail deposits, and then retail lending. I keep saying that people keep asking me and said, are these going to push out the banks? And I said it won't happen. It won't happen at least in Nigeria for the short time because Nigeria is significantly financially excluded. We still have about 50% of Nigerians who don't have the bank in the banking system. True. Bank deposits are also growing, you know, just to support that analogy. And I see there are a lot of complementary partnerships to enable Nigeria grow in the economy. I think those are the key things I see that have happened so far.
Indeed, Chika, a lot happened, and very insightful assessment there. So some have also criticized the CBN for pushing monetary interventions too far. So what are your thoughts on this?
Well, I mean, the truth is this, that the environment of Nigeria is very hostile to lending.
Okay.
Even the IMF has come out to say that the Nigerian banks, performance may be hot because of this, mandatory push for them to lend. You do recall also that Moody's lately, because of the environment, has downgraded Nigerian economy from stable to negative, and at the same time moved Nigerian banks rating from stable also to negative because of the issues that we face. Right. The same weak macroeconomic overhang, and the other issues in the industry. CBN is celebrating that the NPL, non-performing loan ratio, is about 6.6 and it's coming down to single digits. Still above the CBN 5% cap. But the issue is that loans don't go bad immediately you book them. So this amount of loans that the banks are pouring into the system now, we hope that in 18 to 24 months, that we don't start seeing the impact on NPLs. Right. Surely we believe that NPLs will go up, arising from this first lending in the short time. And so because of the trying to avoid the penalties, a lot of banks may not be as rigorous in their risk assessment in pushing out these loans. You know, so that's basically that, you know, the aspect that a lot of us worry about CBN.
All right, so in 30 seconds, how do you see 2024 banking?
Interesting. I mean,
Very brief.
competition is going to, there's more push towards retail banking, more push towards electronic banking. A lot of banks are going to clean their balance sheet more, and we hope that the economy picks up for other things to happen.
Indeed, more positive things as well. Chika Mbonu, I'd like to thank you very much for your thoughts on those issues. Good to have you.